It is the last day of the trading month and my favorite day of the month, because now we're going to go through 3 shares to look out for in December 2017. Let's go. G'day guys, Aussie share trader here. It is the last day of the month, so we are going to look forward to December, and I'm going to give you 3 shares that I'm looking at in the coming month. I'm pretty excited. There's some real good opportunities bobbing their head up at the moment, and trading has just become a lot easier in the last couple of months. Hopefully you're doing well out there if you're doing some trading, and I think you'll find just the whole ASX at the moment, there's just a lot more opportunities. Fundamentally and technically, things just seem to be a lot more positive. Okay, so because we are talking about specific stocks, I do have to read this disclaimer. The information in this video and the links provided are for general information only and should not be taken as constituting professional advice from the Aussie share trader. The Aussie share trader is not a financial advisor. You should consider seeking independent legal, financial, taxation or other advice to check how the information relates to your unique circumstances. The Aussie share trader is not liable for any loss caused, whether due to negligence or otherwise arising from the use of or reliance on the information provided directly or indirectly by use of this video. Okay guys, so always do your own research. These are just ideas. These aren't specific recommendations. Okay, so before we look at the 3 for December, we're going to go back and see what happened with the 3 for November. And the first one was EPW. Now, interesting month for these guys. They were $1.32 when I did the video last month, but by the time I uploaded it, they were more like $1.35, $1.36. So I didn't own them when I made the video. So I didn't buy them on that particular day. I did wait, and I jumped in when they come back down, because they did hit $1.45 earlier in the month, and they sort of got away from me, so I didn't purchase them myself. But they did come back down, and I bought them a couple of weeks ago at $1.33.5. Currently at $1.35, so realistically they haven't done much. I mean, if you had to pick the bottom of the month where $1.28 and rode them up to $1.45, that's about a 13% gain if you had been good enough to get in and get out at the perfect time, but that's almost impossible to do. So personally, I'm still in these. No reason to sell them at this stage. Just give them a bit of time and just see what happens. Now, the second one was ISD, and I said a lot of bad stuff about this company, but they have had a pretty damn good month. They were $1 when we spoke last month. Today they closed at yesterday they closed at $1.19.5. So if my maths is right, that's 19.5% in the month. So yeah, they have been great. I did buy these myself at 98.5 cents. I got out, I think it was $1.09 or $1.10, somewhere around there. So a nice little gain, but they've kept going. Just be careful of this company, because this is the type of company that can lose a lot in a day. Confidence is paper thin in this company, so it doesn't take the market too much to get spooked. So when you think you're having a good run, you know, it can get wiped out pretty quick. So these types of stocks, I do sort of snipe a bit, get in and out, and you know, then forget about them for a while. So ISD, a good one for the month anyway. And the last one was FMG. Well, they basically did nothing. They were 470 this time last month, 462 today, so down 1.5% odd. They did hit 506, but you know, really not enough in there to be trading. I don't think they're going to get massacred, FMG, so again, I'm happy to stay in. I got in probably only a week ago, or just over. I bought these. I've sort of been sitting back waiting. I bought them at 465. I'm still in. Nothing lost at this stage. So that's the 3 for last month: EPW, ISD, FMG, 2 okay, and 1 that did really well. Okay, so let's get on to the 3 for this month. Before I do, I'll just let you know that as you can probably see, I'm in a hotel room here at the moment. I'm just on holidays, a little bit of business involved. I'll tell you what, we're going to play a game. I'm going to put a few photos up in this video, just up very quickly. You got to try and guess where I am, just put your guess in the comments. No prize. Maybe I'll just give a shout out to the people who got it right in next month's video. So just see if you can guess where I am. Anyway, so the first one to talk about is TGA, which is Thorn Group. Now today they are 77.5 cents. Now they've had a fantastic run for the past 4 or 5 days. They hit a low of 55 cents. I think that was just on Friday just gone. They, if you have, and not many people have, but if you want to, get onto my Snapchat. That's the snap code there. Aussie Shares is my name, because on Monday I put up a quick snap about TGA. Just a 10-second, just take a look at this share, that they could be ready to run. And yesterday I put up another snap saying that I'm personally getting out, but anyway, it's all do your own research. The thing about Snapchat is it's a lot more nimble. So if I have an idea or a thought or a share just seems to make perfect sense at a particular time, I can put up a quick snap. I'm not going to do a whole YouTube video about it. So if you do want to get onto my Snapchat, it may be a valuable resource for you. Look, a bit like ISD from last month, this is a company that you wouldn't want to be looking too long term with. There's a lot of issues with TGA currently. A lot of them are regulatory. There's ASX with their responsible lending guidelines. You have APRA, who are running rampant through lenders at the moment with their guiding principles. So there's a lot of pressure on Thorn Group, who own radio rentals and cash first. So they're in that sort of high margin lending space, and ASIC and APRA are just running rampant at the moment. So there's a lot of regulatory pressure on TGA. So that's one reason why you wouldn't want to be there. They are getting sued. There's a court action against them. They do have a worrying amount of debt. So if you look close at this company, you wouldn't touch them. But I prescribe to the old Warren Buffett cigar butt theory. If you don't know what that is, just Google it. But essentially, there's a company that may just have one puff left in it. So you pick up the cigar butt and you take a puff, and that may just be what Thorn Group is. Perhaps it'll turn it all around and take off again. But you have to play fairly careful with these. Now the problem is they've already had a pretty good run they hit their low at 55 cents, and now they're 77.5, so they're already up, what's that, 40 to 50% somewhere in there in the past 4 or 5 days. So you may just have to let these ones run until they run out of gas, and then again you put them on your watch list and you do your own research with these ones and see if you can time them, because there may be just a little bit in these over the next few months. So you take a good look at TGA, go through it with a fine-tooth comb. You may be scared away, but there's also could be some good opportunity in the next month or 3. Okay, now the second one for this month is GNC, which is Grain Corp. If you look at their chart, it's pretty much been a downhill slope for the last 6 months, having hit $10.55, down to $7.58 yesterday, closed at $7.59. So these are another one. I guess the whole consumer staple space has been on the nose for quite some time, but it's a space I'm becoming increasingly interested in, and I think long term, there's just the whole food network. Well, it's been unloved for so long that these things do eventually turn around, and people realize, well, hey, we can't neglect the food network. We need food, so people will start coming back to looking at these consumer staples, especially the agricultural, horticultural side. Now, there's a lot in there that would make good long-term investments. I'm a fan of Costa Group. I like Elders as a turnaround story that's doing quite well now. But Grain Corp as a trade, They have a new chairman on the board, well respected, Graham Bradley. Their revenue was up 10% last year, which after a very flat period for many years is a good little turnaround. So I think there's just a few positive signs there, and all in all, I don't like the word cheap, obviously, but they do look relatively well priced at $7.59, and we could be in for a good month or two, so a trading opportunity there for a grain corp. Now the last one, I'm a West Australian, and I'll tell you that the economy in WA has been a disaster for the past probably 4 years. We've had a new government come in earlier this year, and look, I'm apolitical, I don't have any affiliation with any party, but we did need a change in WA. The Liberals had gone stale. Mr. Barnett, God bless him, was hopeless, and now he's gone. We've got a new sort of vibrant government in, and they're intent on turning things around. And I can just feel as a West Australian, the whole vibe of the place is starting to turn around. So I feel like we're going to be in for a few good years. And one little share that I do like, it's been on my watch list forever, is CWP, Cedarwood. They are just a small developer. They have properties all around Australia, so it's not just WA, but they are a West Australian company. The issues with them, they're fairly illiquid, so very unexciting. I think you're going to need a full 3 months to make your 10 or 15% on these ones. But if you look at their balance sheet, their P&L, it's all very nice. It's not one that you're going to worry too much about having a disaster. And if you factor in that the WA economy may be getting better, they're probably in for some good months and perhaps years ahead. So CWP, take a look at them. Boring as shit, but I think they're a good opportunity over the next 1 to 3 months. Okay, so that is it for this month. So the 3 shares were TGA, GNC and CWP. Put them on your watch list. Do your own research. There's so many opportunities out there. I'll be happy to hear yours. So if you've got some that you're really liking at the moment, just make sure that I have one criteria. The first thing I look at, make sure if you're going to give me a share to look at, that it actually has revenue. I don't look at shares that don't have revenue. So if it's going to be a lithium stock or a marijuana stock, I did a video about them recently, don't bother unless they're actually billing. It's billing, billing somebody. I'm not interested. So, but if you do have a good little company that I haven't mentioned, that I may not have on my watch list, just pop it in the comments below with a little bit of detail about it, and I'll do a bit of research myself and get back to you on that one. Other than that, have a fantastic month. December, traditionally a little bit quiet in December, so maybe things will be a little bit slower and take a little bit longer, but generally there's no crashes in December as well, so let's just hope we get through unscathed and get to 2018. So have a really good trading month.